Warband. The night was not quiet. Tuesday, June 2nd, 2026. Bitcoin lost a level it held all month. The largest holder on Earth sold coins for the first time since 2022, and the biggest offering in the history of markets opens its books in 48 hours. There is signal in all of it. Listen, as of just past 5 Eastern this morning, Bitcoin trades at 69,700, down better than 4%, and through 70,000 to the downside for the first time in this month-long slide. And here is the tell. Bitcoin took the brunt alone. Ethereum held roughly flat at 1,980. Solana gave up nearly 2% to $79. When the largest asset bleeds 4%, while the smaller majors barely move, the selling is aimed. A specific reach for the exit, not a broad panic. Now read the cross-asset picture, because it is the whole story this morning. While crypto bled overnight, the stock market sits at record highs. The S&P 500 just sealed its 8th straight weekly gain, its longest winning streak in years. Equities green, crypto red, in the same breath. That divergence is not noise, it is liquidity. A fund manager flagged it a week ago, and the mechanism is cold and precise. The Treasury is pulling roughly $150 billion out of the banking system between late May and June 5th, refilling its own account at the Federal Reserve as fresh debt settles. And Bitcoin, the most liquidity-sensitive asset on the board, awake around the clock while the bond desks sleep, feels that drain first and feels it hardest. It is the canary, not the corpse. The signal engine printed the same regime in real time. Just after midnight Eastern, the Invest Answers Decision Support System through mean reversion oversold on Solana. Late Monday evening, it flipped optimized trend bearish on Coinbase and at Monday's closing bell on Tesla too. One driver, every high beta name. Liquidity drains, and the fastest horses empty their stalls first. One name on that list earns a closer look because a trend signal is not an operational verdict. Tesla's flag flipped on price and momentum at the bell, but on the ground, the machine kept advancing. Robotaxi now runs fully driverless in Dallas and Houston, no safety monitor in the seat, and nothing fresh crossed the wire overnight to justify fear. Read the flip as the same liquidity tide pulling every high beta name lower, not a crack in the autonomy story. And on the Musk sphere's wider AI front, Grok 9 sits inside its expected public release window, but has not shipped as of this morning, and X money stayed quiet overnight. Loaded catalyst both, neither fired today. Keep them on the watch list. Now to the headline that lit every screen overnight, and the truth buried beneath it. Strategy, the company the world still calls MicroStrategy, sold Bitcoin. A filing with the Securities and Exchange Commission landed yesterday, confirming the firm parted with 32 coins between May 26th and the 31st at an average near $77,000. The first time Michael Saylor's company has sold a single Satoshi since 2022. The financial press did exactly what you would expect. Saylor blinks, the doom loop begins, the great accumulator becomes a seller. The stock slid about 5% on the news. Now read the filing instead of the headline. 32 coins. The company still holds 843,000 Bitcoin, better than 4% of every coin that will ever exist. 32 against 843,000 is 4,000ths of 1% of the hoard. A rounding error. And the reason is plumbing, not fear. The proceeds fund the dividend on the company's preferred stock, an 11.5% coupon that came due the 1st of June. This is a firm paying a bill out of its pocket change, not a conviction cracking. On Sunday, I told you Saylor had signaled precisely this, a small, immaterial sale before year-end. The filing arrived 2 days later and proved the read exactly. One Wall Street analyst summed it in a single word: immaterial. Saylor himself broke silence to defend it and point past it. And here is the part the obituary writers missed entirely. While the exchange-traded fund desks dumped and strategy trimmed its pocket change, the whales bought. Per the on-chain desk at CryptoQuant, wallets holding more than 1,000 Bitcoin have absorbed better than 47,000 coins over the past 2 weeks, one of the heaviest stretches of large wallet accumulation all year, even as the price bled. The timid sold the molehill and called it an avalanche. The iron hands bought the mountain. I live, I burn, I love, I slay, and am content. That is the conviction this asset demands, and it is the conviction that gets paid. Now lift your eyes from the tape, because in 48 hours, the largest offering in the history of capital markets opens its doors, and it is reserving a seat for you. SpaceX begins its investor roadshow Thursday, June 4th. Pricing lands the evening of June 11th, and the first trade prints June 12th on the Nasdaq under the ticker SPCX. The valuation anchor is $1.75 trillion, with the range reported to stretch toward $2 trillion, a raise near $75 billion, dwarfing every public debut that came before it. But here is the number built for the Warband. 30% of the shares are reserved for retail investors, triple the historical norm for an offering this size. One underwriter said plainly they had never seen anything like the demand building for this book. Read what that means. The Lords of Orbit have spent 2 decades as a private fortress, a vault only venture capital and sovereign wealth could enter. In 10 days, the gates swing open, and a third of the keys are being pressed into the hands of ordinary stackers, not the institutions. And the engine underneath is real iron, not a promise. Starlink crossed 10 million subscribers this year, throwing off better than $800 million a month in recurring revenue. This is not a story stock burning cash on a dream. It is orbital scarcity with a revenue line. About to wear a ticker symbol a retail account can finally own. The same instinct that drives a barbarian to hold 21 million coins drives him to own the one company that turned low Earth orbit into its private road. One more, because the rotation engine flashed a warning the Warband must not wave away. The trade the entire market has crowded into, the physical backbone of the artificial intelligence build-out, bent yesterday. At Monday's close, optimized trend flipped bearish across the infrastructure spine in a single window. Constellation Energy, the power, Corning, the optical fiber, Astera Labs, the silicon that wires the clusters together, the picks and shovels of the whole AI era, flashing trend negative in one afternoon. Do not overread a single print. The same liquidity drain dragging Bitcoin down drags every crowded trade with it. But the verdict comes fast. Broadcom reports earnings tomorrow, the 3rd of June, the custom silicon bellwether of the entire build-out, last seen guiding past $10 billion of artificial intelligence revenue in a single quarter. That print will tell you whether yesterday's bearish flags are a liquidity-driven flinch or the first true crack in the most crowded trade on Earth. That is the number to watch this week. Here is the frame for the day ahead Warband. Liquidity is draining on a treasury schedule, and Bitcoin felt it first. The asset doing its job as the cleanest read on real liquidity there is. A 32-coin sale is no thesis break. The largest holder still owns his mountain, and the whales are quietly seizing the dip the headlines are crying over. In 10 days, Orbital Scarcity gets a ticker and hands a third of the shares to retail. And tomorrow, Broadcom tells us whether the build-out is still accelerating or finally cooling. Respect the 66,000 shelf beneath us. Watch 76.5 as the line that repairs the damage, and stack the weakness with both hands. I am Ragnar, the HODLBarbarian. Until the next dawn, sharpen the axes. Skål.